Okay, it's my pleasure to come here to give this speech. The topic I'm going to introduce today is China's economic financialization, productive investment, and economic growth. With the globalization, the financial crisis, and the change in China's economic conditions, China's financial characteristics has also undergone significant changes, especially up to 2008, with the slowdown of productive accumulation. The institutional factors that once support China's high growth have gradually exposed their own problem. The deviation between financial expansion and productive accumulation has identified is the slowdown in China's economic growth related to the deviation between financialization and productive investments. Based on this, we started the following contents. Firstly, we show some forms of financialization through the shifts in the behavior of economic agents. These forms reveal the increasing importance and dominance of China's financial sector, as well as the rapid growth of the sphere of speculation. And then we examine the relationship between financialization, economic growth, and productive investment. First of all, we will briefly introduce the concept of financialization. This concept, although it has been widely mentioned by scholars in recent years, there is still no unified definition. Many scholars define it from the micro, and the meso perspective. What we used here is mainly the micro perspective, which can be summarized as the increase in the importance and dominance of the financial sector in the national economic sector. So we will show the China's financialization through the behavior changes. Firstly, the behavior of non-financial companies has changed. On the one hand, the source of corporate funds began to shift from borrowing from banks to rely on internal financing and external financing in open markets. With the establishment of China's securities market and the opening of asset utilization business, the source of funds of enterprise has changed. It can be seen from figures that the proportion of bank loan financing has been declining since 2005. In contrast, the proportion of fund financing has been rising and has gradually become the main financing channel. On the other hand, enterprises are increasingly involved in financial activities and have gradually developed independent financial trading skills such as trade credit and foreign exchange transaction. Account payable is a direct manifestation of corporate trade credit, as shown in the figure. The ratio of accounts payable to operating costs has also increased significantly. At the same time, the foreign exchange trading business has also increased to a large extent. Secondly, because of the change in the relationship between non-financial enterprises and banks, banks have undergone significant transformation, with the increasing proportion of direct financing of non-financial enterprises and the rising demand for investment banking service. The commercial banking industry has begun to get involved in investment banking business. As a result, banks have gradually turned to financial market intermediary to make profits by earning fees, commissions, and trading profits. Net fee and commission income is an important source to measure the investment banking business. Figure 5 shows that its chart is changing shape. Although it has declined in previous year, it still occupied a large share. In addition, Banks have also turned to household and individuals for profits. In recent years, the retail banking business of China's commercial banks has developed rapidly and has been an important source of stable income for banks. Taking the data of China's 6 major banks in 2023 as an example, the retail business revenue has even gradually surpassed the company's business in recent years and has become the main revenue source of commercial banks. In addition, financial development has brought a shift in residents' behavior. Residents are increasingly connected to the financial system in terms of borrowing and holding financial assets. First of all, the financial assets held by residents have not only increased rapidly in total, but also changed in structure. The resident sector use of funds in insurance, bonds, stocks, and bonds have increased significantly from less than 10% to 26% now. Secondly, the debt of the household sector is also increasing. The leverage ratio of China's resident sector has increased by more than 10 times in the past 2 decades, indicating that household consumption is increasingly dependent on debt. And the increase in debt is not only due to the increase in housing mortgage loan. Through short-term consumer loan data, it can be found that the general consumption, health, and education loans are also increasing. From the above changes in behavior, it's evident that China's financial sector is becoming increasingly significant and its dominance over the economy is rising. Next, we empirically test the relationship between financialization, economic growth, and productive investment. In the past, China's past resistance to the negative effort of financialization relied on low labor costs and mass production, but the financial crisis in 2008 and China's new structural needs make this model unsuitable. Therefore, we contrast model 1 and 2 to examine the impact of financialization on economic growth. And then we further contrast a 2-stage regression model to explore the transmission of economic financialization to economic growth. The core explanatory variable is the degree of financialization, which is measured by the proportion of foreign industry output value in GDP. And then we also use the proportion of bank credit to GDP as a proxy indicator to measure the degree of financialization from the characteristics of the financial system. And the explained variable is the level of region economic growth, which is measured by per capita GDP. And the channel variable is the productive investment. Firstly, we empirically test the impact of financialization on economic growth. Results show that the coefficient is always significantly positive, indicating that it has a positive role in promoting. However, the result of the last 2 columns introduce the interaction term, and we mainly focus on the coefficient of the interaction term. We can find that after change of China's financial characteristics in 2008, the inhibitory effort gradually appeared. That means the deviation between China's financialization and productive investment has emerged. And then we conduct a robustness test. Firstly, we replace the definition of the variable and use the proportion of bank credit to GDP as a proxy indicator to measure the degree of financialization. And then we further investigate the possible revenue casualty problem and the possible time lag efforts. For this reason, we use the lag term instead of the original variables for regression, and the results are basically consistent with the previous results. And then, according to the model 3 to 5, we examine the important law of productive investment in the transformation of the relationship between financialization and economic growth. Column 1 to 3 show that 1 and 3 show that the impact had of various differences before and after 2008. After 2008, the regression coefficients was significantly negative, indicating that the promotion effort to financialization on productive investment decreased significantly during this period. And column 2 and 4 show the effort of productive investment on economic growth is always significantly positive. Based on the above results, we believe that financialization will have an impact on economic growth through the channel variable of the productive investment. And because the impact of financialization on productive investment has changed, the impact of financialization on economic growth has changed. And in recent years, China has gradually shifted to a market system, so monetary policy plays an important role in economic regulation. To listen, we further examine the moderating effort of China's monetary policy. We contrast equation 6 to examine its efforts. And in the theory, the impact of monetary policy also has a dual effort. Therefore, its impact is uncertain. And the column 1 and 2 show the adjustment effort of the monetary policy in the whole same period. The direct effort of the expansionary fiscal policy is to promote economic growth. However, the coefficient of the inflection turn indicates that the crowding out effort caused by the loose monetary environment may be greater than its positive effort. Columns 3 and 4 show the result of the 2 periods before and after 2008. We find that the negative moderating effort has become more pronounced than before. It also shows the crowding out effort compared to the previous enhancements. Finally, we will make a simple summary. For a change in the behavior of non-financial enterprise, banks, and residents, we find the importance of financing is rising. China shows certain characteristics of financialization, and China's financialization has a positive effort on economic growth, but it has changed up to 2008, and the inhibitory effort has gradually emerged. And third, the main reason for its change is that the impact of financialization on productive investment has changed. Finally, we find the loose monetary policy may accelerate the negative efforts of financialization. That's all. Thank you. Is there any questions or?
Yes, I would like. Can you put your first slide, please?
First slide, she asking. I think we need to share your slide so that you can see. Share this. Ask if there is which one.
So how do you define in the second one?
What?
I would like to see how do you with that say financial crisis and the change in China. I think I lose. And the next one, how do you define the financialization process?
That's one.
That's what I would like to see. Promoting a non-linear impact. I can see this definition of promoting effect. Okay. Yes. So you decided to the definition of financialization in this in these authors. So which will be your definition of financialization?
That's what I want to ask as well. What is the definition of financialization? What's the one that you use?
That's a good question. Actually, financialization means that the capital circle is from the monetary to the C, the commodity, and to the M plus V surplus value. Financialization means we can skip the middle one. We can get profit from the monetary to the monetary. So there is with the financial sector development, there is a division between productive investment and financial development. The financial sector will not serve the productive sector.
Okay. May I make a comment, Sam, or until we finish the presentation?
She's saying that maybe we can ask. But Michael Roberts actually just asked. Also, just see. There. Go to the chat. Yeah. Do you measure financialization by investment in FIRP?
Yeah, I measure financialization by the industries put in the GDP. This definition we can many scholars have used it, such as Krippner.
So the answer to that question is yes, you measure financialization by investment.
Yeah, but it's a little difference because it's not investment but buyer's output in GDP.
Do people want to ask more questions now, or will be after? No. If not, then maybe we could have Alicia who will present.
Sam, we don't, if you don't, please go near the microphone so we can hear you.
Okay, sorry about Alicia. So I'm just saying that because we don't have questions for now, so we will have your presentation first, and then maybe afterward we have more questions. Okay.
Okay.
And share.
Okay. Well, I'm going to share my PowerPoint. Okay. Well, I have been studying all the building sector in China, and especially since 3 or 4 years ago, where around the world we know that Evergrande, one of the biggest company in the building sector, was they have about $300 billion that it has to pay. So after studying Evergrande, we decided to also to study Country Garden, which are the biggest building sector. So what we can find here? So the crisis in the building Chinese sector, is it very similar to Lehman's Brothers? Is it very similar to the subprime crisis around 2006, 2007? And so the question is, could it happen again? So if we see, if we have read Minsky theory, we know that when you have, you grow too much, you are setting the instability and instability process. So after this, let me see. So the first is, what does a crisis in the real estate sector mean when it has been decisive in contributing 20% of the GDP of China's economic development during the last decades? So the objective of this paper is to highlight the importance of institutional investors in corporations such as China Evergrande Group Company and Country Garden Holdings Company, for the importance of being the main players in the financial markets. So institutional investors, as well as mutual funds, have secured rates of return above the global benchmark interest rate. The main hypothesis.
It was just breaking up earlier, but we are fine now. We can hear you. Sorry.
I don't.
Yeah. So I think in the meantime, if you have any questions for Zhenyu, you can ask questions now, because we are trying to see if we can get Alicia back online. She just dropped out for some reason. So. Maybe you can say a little bit more about your findings. You said there was a period that you said financialization was helpful for productive investment and growth. But then after 2008, it's actually going to reverse.
Yeah, but after 2008, we can show a deviation between productive investment and financial development. So in 2008, the fire and the productive investment is a negative relationship.
Why is that? Do you have any thoughts about why there was a first relationship in your analysis? Why? What happened at that time?
Because many enterprises use their funds to make profit in the financial market. So it has a crowding out effort, make the productive investment decline.
Okay, so it's a crowding out effect because the non-financial sector, they actually going into the financial sector to invest and
to
get profits.
The creation,
okay,
but not in the productive. They use the money to speculation.
Okay.
Okay, So now you're here. We don't have any problem, right?
Yes, we can see the screen fine. Yes, okay.
Okay. So okay. Well, so the thing is that we want to find if there would be a Minsky moment if these companies will fail. But the other thing that we want to find in this paper is to see the contribution of the holders. So as we were seeing is that 27% of the GDP of China's economic development during the last decade is the building sector. And these big companies as China Evergrande and Country Garden, they are many institutional investors as well as mutual funds that have secure rates of return above the global benchmark interest rate. So the hypothesis is what will happen if these companies bankrupt. So we wonder if the increase of non-performing loans of these real estate companies, such as Evergrande and Country Garden, could impact a bank failure in the same way as it was in the subprime crisis that impacted the bankruptcies of large banks. Too big to fail, too big to say in the United States. Could it be replicated in China, the ghost that haunted Lehman Brothers in the international financial circuits, triggering a new crisis like the great international financial crisis? Or will there be a missed moment? So if we continue, we see why this is very important, because it's that 27 of the GDP of China's economy is the building sector, but Chinese contributes that 24% of GDP in the global GDP. So that's why it is very important to see what's going in the building sector. So the importance of what happens is one of the most important real estate consortium is because China has contributed to 28% of GDP globally until before the confinement and was the only country whose GDP did not fall in negative numbers and reached 2 weeks after the pandemic was was finished. 1 year later, China reached 80% growth in GDP in 2022. Even in the last numbers of GDP, it was 5.4% at the beginning of 2024, and maybe the expectations is that it is falling. It isn't in the same way as the other rates of the other countries. So in this paper, we are interested in demonstrating the importance of institutional investors as shareholders in real estate companies, such as Evergrande and Country Garden. So the real estate companies having been a source of work for a part of the population that migrated from the rural sector to the urban sector. And the real estate sector focused on industrial and urban areas, showing a gradual growth of a working class in the urban area that are demanding houses. So this is the building sector is very related to the migration from rural to urban cities. And at the same time, many local governments finance real estate growth. So today, beyond thinking of a real estate crisis, the governance of local banks presents challenge in the default of loans, increasing non-performing loans, as well as the participation of large corporations and banks in financing the country's economic development. So it is also very important that to mention that real estate companies had been presented payment problems with the creditors prior to COVID-19 as a result of the structural problems in an environment of reduced interest rate during the second decade of this century worldwide. Since the confining, the Chinese government implemented drastic measures, causing a decrease in housing construction and deepening the overdue portfolios of real estate companies that depend with the post-pandemic. In the course of the last post-pandemic years, the engine of the real estate sector is important for the consumption required for construction. So other things that it is very important is that the Chinese real estate market has been an important due to increase the Chinese real estate market has been an opportunity due to the increase in prices for years, which allowed a promising future for many families to acquire an apartment, as well as allowed speculation in the face of the low interest rates granted by the banking sector. Nonetheless, Evergrande's trouble and its knock-on effect on the economy and social stability are the biggest evidence of Beijing's renewed campaign to end debt-driving speculation and halt rising house prices as the government tries to reduce inequality and thus keeping housing affordable for the masses. So the SP Global Commodity Insights note that the real estate sector for 2022 accounted for 30.8% of the steel consumption with 280 million metric tons, down from 36.2 in 2020. So what we are seeing is that the demand of steel has been decreased, and also others. For example, in addition, this sector is the largest consumer of aluminum with around 30% of total demand, according to market sources. Copper, for example, is a demand from the construction and appliance sectors account for more than 20% of the country's total demand, according to market resources. And real estate and infrastructure account 30% of China diesel demand, about 3.70 million BD, according to the source. So the refined products is not only burned directly as well as construction machinery, but it's also used as a transport full to sheet machinery and materials such as rebar, cement, and wood. So at the end, what is the problem here? And I'm going to go more. The problem is that when Hong Kong, in January, Hong Kong ordered the liquidation of China Evergrande. So if we go, who are the investors? You are going to see all these numbers that are very important. For example, this Vanguard Allwear, it is, well, all the names that we are going, I'm not going to read it, but it's also, they have very important institutional investors that are in these companies. So the problem is what will happen if we will have a missing moment, is we are going to have a bankrupt of these companies. What will happen with the institutional investors? So the implication of the decision have not only of this decision that Hong Kong ordered the liquidation of China Evergrande, the importance of this decision have not only been affecting a significant part of China's consumption of steel, aluminum, diesel, copper, bitumen, and some petrochemical products, but also institutional investors that will clear a sharp fall in the share price of Evergrande surprise and creditors in the international financial circuits. So, well, this we have already seen. So let's go, and I'm going to show some, if you see, which are the principal, this is China Evergrande. Here you have the mutual funds and the institutional investors. And you see, first you have Vanguard, MGI funds, Aviva, BlackRock, it's here. They have, here is this information we take from each company, but also from we cross the database of the Boston University with the Wall Street that database. So this is China Evergrande. In the next one, let me see. In the next one, you are going to have the Country Garden Holdings. For example, you have again Vanguard Emerging Markets, Vanguard Total International, Vanguard Institutional Total, Vanguard Global. So they are different companies that have also shares in this very few, because this is the other thing, that how the institutional funds and mutual funds play in the global market. And for example, in the institutional, you have also UBS Assets, BlackRock, Charles Schwab, Hang Seng Investment, State Street, and many others. So what, how this is what we have here in the mutual funds. But I will go to the other chart, and here are this is around the building sectors. But now what you can see here is the amount of the Country Garden liabilities, yes, in billions in the left part of the chart. And then you have is the percentage, the annual variation of the total liabilities. This is Country Garden. Let me see. And then you are this Evergrande. As you can see, the importance of seeing this chart is that you can see that even before the COVID, because COVID was very important by the measures that the government took place, that is that they have problems inside their own. For example, you can see the margin of the ROE, even in that. If you see, for example, in Country Garden, just before, with the COVID, after COVID, it was less 32.50% of decrease. But even this is very interesting because you can see that they have promised just before COVID between 2019 and 2020, of course, it decreased a lot during the pandemic, and it is also the same with Country Garden. So that's what else. So the reflection is that today, the situation we are experiencing from the pandemic, surrounded by several crises, including the reverse of the 10 poly crisis, fixes out gaze on China for the economic development it has prior to the pandemic by promoting large investments in communication infrastructure within its country. Secondly, the heavy investments made through the Belt and Road in colonial countries on the African continent and in the Latin America. And third, the rapprochement with Russia as a result of the war makes the People's Republic of China a very powerful power on the map of economic and political disputes, including the investment in the digital and climate and climate change. So I think with this, I think I finish here, and well, I will stop sharing the PowerPoint. So
Thank you, Alicia.
can,
That was great. Can you hear me? Yeah. You can hear me.
I can hear you, plus please go near the microphone. Thank you,
Okay.
Sam.
Yes. So, do we have any questions for Alicia from the audience here? Yes, please, Joseph. She may not hear you very well, so we can come closer to you.
They come here.
Yes.
I firstly had a technical question. What is the share of institutional funds at Evergrande and Country Garden, or totally? So you mentioned only some small parts, but what is the total share?
That's yes, we have one of the things that we have to see is how these institutional investors are around the world. For example, the shares we have, they aren't too much. There are a lot of institutional mutual funds that are in all around the world. They are in the building sector in China, but at the same time, they are in other parts of the world. So the percentage of these institutional investors, if you see, the percentage is it is a great amount. Maybe it is a great amount if you sum all of them, but it isn't too much. So that's why the question of the paper is if it will destabilize a crisis in these companies will destabilize all the financial market as the same it was in Lehman Brothers. The point here, it is very interesting how these institutional investors are in this company and why they are, because they are not only in Country Garden, or they are also in the principal Chinese companies. For example, they all of this, the same that you see here, they are going to repeat in all these, even in the state companies. So since China have opened to the institutional investors and the mutual funds, how you can explain that in the state companies, they have these holders. So I think it's a process. If you see all the big companies of China, state companies, and also private companies, Chinese companies, but also American companies or French companies, it's a process of financialization. And I want, the question is, it will be a missed moment. I don't think. Maybe this will, even it is, Lehman Brothers was in USA, but Country Garden and Evergrande are in China, and the government of China will not permit a bankrupt of these companies because it means employment. It means a political issue. They won't go in bankrupt. They are renegotiating the debts. They are trying to change the policies of the department. And other thing that you have to raise, why the importance of having an apartment? Maybe you have an apartment and now you want to buy another one because the interest rate of your wealthy are very low. So there are many aspects to study the building sector, but from different phases. And of course, the participation of these mutual and institutional investors has to, it's very normal that they have in these countries and in other countries, even because the thing is, why they have invested in this? You have to also to understand that before COVID, the interest rate in many countries, the central bank interest rate were almost 0%. So this was a good an alternative to have a better profit. I don't know if I have answered your questions. Sorry if I didn't, but more or less.
I'll let you think of any other questions, but we've got a question from Michael Roberts. Alicia, can you see his question on the chat?
Oh, let me see. I haven't opened the chat. Alicia, do you agree or not that China should never have conducted its urbanization housing programs through private developers and finance? It should have built homes by state companies for housing needs and funded this through the state. Well, why state companies? Well, maybe I am just beginning to study the building sector, but it must not be private developers. So this is very interesting that they are private developers and they are financing like it was an American company or whatever. So maybe of course the state companies in China are very important, especially they are very important right now in the Belt Road Initiative, in the bridge. But well, it was maybe because also you have to understand that this building sector was very related with the province governments. It was a way to have to increase their building sector in the urban areas. Also in very, and it was a form to pass from the rural to the urban and have a better building. I don't think it was just a form to give the private sector other opportunities. That's my what I think.
Any questions from the audience here? Yeah.
I want to try again, so maybe I didn't catch it. I only want to hear one number. So what is the share on capital from outward capital, from global capital? Is it 10%? Is it 40%?
Very few. Very few.
She said very few.
But the percentage are very little, are very little. It is for these international investors is just to be there, and but the shares are very few. They don't have too much in invested, so that's why maybe in a bankrupt that it wouldn't be, because China is not going to bankrupt their companies. They are they will lose very few. It's a position of the institutional investors to be whatever it is. Yes, I agree. This is Michael Roberts says, Alicia, I also don't think there will be a messy moment. The government has lots of fiscal space to deal with this debt, but should not the state take over these bankrupt developers and others and instead set up a state building corporation to complete housing programs for here on?
Yes, Alicia, actually, I think I have a question similar to what Michael's just put out there. Because, yes, you have compared the situation, Evergrande and other housing developing developers in China, similar to Lehman Brothers. I think one of the similarities is the high ratio of leverage, that they were like able to get loans that they possibly can't repay. Now, with such fall of the shares, and it's almost just normal that these companies will go into bankruptcy. But you also said that the state is not going to allow this to happen, like how Lehman Brothers situation, how it evolved later on, a snowballing effect on the whole economy. So Chinese state is not going to allow that to happen. So have you identified what are the major measures they have taken to stop the snowballing effect and actually turn it around, or they are actually still in this crisis moment that you're not able to tell how that is going to resolve, or you already spot some kind of indications that the Chinese state is doing something fundamentally different to how the US dealt with the Lehman Brothers crisis?
Yes, of course. Well, first of all, they won't be a Lehman Brothers. I agree. The question why if it will be, no, it won't be. Second, 3 years ago, the government has the three drivers. The three drivers that Xi Jinping said that the department was to have a social effect, but it wasn't a business. So, he stopped that. So there's a state policy to stop the incredible profits that these private companies have had. So what else? And so it won't be a missing moment. It will, the government is taking some policies to stop all this speculation. And the third one is that, well, it was like a moment, but they are going, even in the last week, not in the last months, the government is trying to stop all this. I don't know if they will take these companies. I don't know, but so they are taking some measures to stop. But this is very interesting how the financialization process arrives in these companies, because it is not only the building sector, it's around other companies. That the holders are very important, and but the international holders is taking position in China. Another thing that I want to say, because this is very important, just last year during the month of August, between August and September, there were in the Financial Times they were some news that it says that in the government, in the USA government, they said that Vanguard and BlackRock, but especially Vanguard and mutual funds, were financing the red, I don't say how to say, the ejército, the Red Army of China. So it was like very, I just couldn't understand that. It's because in all this confrontation between USA and China, they are really very crazy ideas in the parliament, especially in the US parliament, and especially with the Republicans, that they want to tell these holders, these international holders that has $1 trillion in the financial market, to stop sharing stock in Chinese company. This is very irrational. So it is like very funny to say that these holders are financing the Red Army. So this what? That's a very crazy idea. But it is also you have one thing is the economy, how it works economy, and the other is how to understand the political of USA trying to. It's just crazy. I'm sorry, I'm not there because it would be more interesting to talk with you in person. But I don't know what else. I'm really very happy. I came to the lobby in the hotel here. I have a better Zoom. Thank you very much.
No worries. I think we enjoyed the session, your presentation, very informative. So before I close, anyone have any questions for Alicia from the audience here? Any questions, comments? No, then I think I will end this session now. Thank you, Zhenyu and Alicia, for your presentation. I think that is yes, Alicia, unless you have anything.
Yes, I don't know if the guy that asked me some questions, what is your name?
Joseph. So Alicia was asking, what's your name?
Joseph Paul.
Joseph.
I don't hear, but please write me, send me an email. I am alicia@unam.mx. So I can give it to you, and so we have a better conversation.
Take a little bit longer, Alicia, just because Joseph actually wants to ask.
But I would like to ask you, the Chinese still implemented some measures in the last 3 years. So I think the situation has changed. I think, yeah, maybe I didn't catch it, but you didn't refer on this changes in financial policy in the last, yes, 2 or 3 years. Do you have more information on this?
No, I don't have more information. This is well. I have been working since 3-4 years with all the principal stakeholders. Even yesterday, I present in the European Association Evolutionary Economic here in Bilbao. I present a very similar work about the investments that these holders are having in the Chinese corporations, but in renewable and non-renewable corporations. And you know what it is very important. For example, if you see BlackRock, which has $1 trillion in assets now around the world, you see BlackRock is here in Evergrande and in Country Garden, but they are also, for example, in renewable and non-renewable corporations in China. So if you see, well, how they are in this building sector, they are also in renewable and non-renewable. So we must see how these holders are everywhere. So if something happens in one sector, maybe they will lose some part, but they are winning in others. And one of the things that it is very interesting is how they are financing renewable sector, because it is right now, it's a changing with all this climate change and whatever, they are changing their investment from non-renewable to renewable, but they are not stopping. They are not finishing their investment in non-renewable. They are going. So this is like a transit to renewable. and and the answer is the profits. So that's why, well, it is a capitalist system. And in China, well, there also is a financialization process, and it's because profits, and it is also position of these colors around the world. So Joseph, I think I answered, but if you would like to continue, I will learn a lot, and I'm very grateful of your question.
Okay.
And
So
I hope next year, where it is going to be the next conference, Sam?
we don't know yet. They haven't announced it yet, so we will see. I hope to see you in person, Alicia.
I hope. I'm sorry because I applied to be here with you in Istanbul, but they invite me to give the key conference yesterday in Bilbao, and I just couldn't say no. So that
Okay. No problem.
so I don't know why they have at the same time so many conferences.
Okay, no problem. You made it here online. We benefit from it anyway. So thank you again. We will have the third panel. I think it's tomorrow. So we finished all the China panels for today, and afternoon you can feel free to go to anyone and the plenary as well session later on today. So thank you.
Thank you. Bye bye, Sam. Thank you very much.
Yes, see you. Bye.
Bye bye.